Investing with $100 is a smart way to begin building wealth and learning about the financial world. Here's a breakdown of strategies for making the most of a small investment. 1. Micro-investing apps. Apps like Acorns, Robinhood, and Stash allow you to start investing with very small amounts. They round up your daily purchases and invest the change, making it easy to start without needing a large sum upfront. These apps often provide a range of investment options, from ETFs, exchange-traded funds, to individual stocks, allowing you to build a portfolio and learn about different asset classes gradually. 2. Exchange-traded funds ETFs. ETFs are a collection of stocks or bonds that allow you to invest in multiple companies at once. This diversification reduces risk and requires less knowledge than picking individual stocks. With $100, you could purchase shares in ETFs like the S&P 500 or sector-specific funds, which track a segment of the market and often have low fees. Many platforms, like Fidelity or Vanguard, allow fractional share purchases, so you can own parts of higher value ETFs with minimal funds. 3. Fractional shares. Platforms like M1 Finance and Robinhood allow you to buy fractional shares, meaning you can own a piece of expensive stocks like Apple or Amazon with as little as $1. This is a great way to access large, high-performing companies without needing the full share price, giving you exposure to growth stocks that might otherwise be out of reach. 4. Peer-to-peer lending. Sites like Lending Club and Prosper let you lend small amounts to individuals or businesses in exchange for interest payments. You can invest $100 across multiple loans, spreading out risk while potentially earning higher returns than savings accounts. This option involves more risk, so research the borrower's profile and start with lower risk lending options. 5. High-yield savings accounts or certificates of deposit CDs. If you prefer a lower risk approach, consider putting your $100 into a high-yield savings account or a short-term CD. While returns are modest, they are guaranteed, and you can always use this money as a foundation for future investments. Look for online banks offering competitive interest rates on savings accounts or CDs, which can be better than traditional bank rates. 6. Index funds. Index funds, like ETFs, are a basket of stocks or bonds, but they track an entire market index, such as the S&P 500. Platforms like Charles Schwab and Fidelity allow for minimum investments, sometimes as low as $1, to get started. Index funds are low-cost, diversified investments, making them a great choice for beginners looking for stable, long-term growth. 7. Invest in yourself. Consider putting $100 towards financial literacy by buying books, enrolling in courses, or attending seminars on investing. Knowledge is a valuable asset that can yield long-term returns by improving future investment choices. Besides these, I would like to give you the final tips to invest your $100. You should set realistic expectations. With $100, aim for steady, gradual growth rather than quick profits. With an aim to diversify your investment, you need to spread your investment across multiple assets to manage risk. It is better to start small, learn, and scale up. You should use this initial investment to gain experience, which you can build upon as you add more funds in the future. Investing with $100 might seem modest, but it's a crucial first step in learning and building wealth over time. Following these tips will definitely help you invest wisely. For more finance-related content, stay tuned, and don't forget to like, comment, and subscribe to our channel.